Everybody, but we got a lot going on here. We have 3 guests today and all the earnings. All right. And we have a market that's rallying. So a lot to get to on the show. I'm not going to waste any more time. Let's roll that intro and get started right now. Smash that like. Here we go.
Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Let's bring on Joel here. Let's bring on Dennis here. Joel, let's get your charts up and let's roll because we got a lot going on. We are in a fast market here.
Yeah, we are. We got a lot going on. We're at 56 3/4 handles at 42.3750. Pre-market high 58.75. Nothing up there. I'll talk about the pre-market low here in 1 second when Triple D comes on. Crude down 76 cents at 101.27. Gold in the red again, down 230, 1886.40. Silver down 39 cents at 23.12. Bitcoin, that's up 870, 39, 770, clinging to 38K. Ethereum, that's up $71 at 29.2850. Nice. I'm gonna bring on Triple D here, and Triple D, if I was in an office with Bob Bright, he would be very mad at me.
Why? Why?
Well, you know, there was a big pop in the after hours, right? After the Facebook. Mm-hmm. I mean, you know how we talked about how they just like the closing print means like absolutely nothing, right?
Yeah.
So we went off the board at like 11.50, which was 20 handles above the close, right? You're like, you know, who wants to pay up, right?
Yeah.
So I put a bid in overnight. I like to put, you know, bids or offers in overnight, put a stop and just see what happens, right? So I put a bid in, nice round number of 4,200. You know what the low is?
4201.
42, worse than that.
4,200 and a quarter.
50. 4,200.
Missed it by 50. Missed by half a tick.
A half a tick. They don't hit bids when the market's going down.
Yeah, they don't. Joel, you taught me that was one of the first lessons you taught me in 1999. They don't hit bids when the market's going down. When the market's going up. When the market's going up. And I use that. I mean, when I'm trading, you know, if I'm trading headlines or something, you don't throw out your bid and hope somebody hits you. You left the offers. You got to pick off the dumb money that's sitting out there on the book. And yeah, so I mean, S&P futures choppy. You missed it by a little bit.
Yeah.
And now we're up 50 handles.
I know. Well, it would have been. Well, it only.
Oh yeah, because you were up 20.
Yeah. And then in the middle of the night, I went, I'm going to go to 10. I'm going to go to 20. And I think I maybe adjusted it up to like 25 or before I went to the pool. And I'm like, forget that. I'm not chasing. I canceled it. Now I don't know what the hell to do. I hate these kind of days. To me, like the rally's over, you know? I mean, or at least it could be over. But anyways.
We do have some housekeeping here too. Back from his wedding day. Yeah. Money Mitch got married here. Congratulations, Money Mitch. Is he hiding in the background?
There he is.
Look at this. That's serious, man. That's serious right there. Investing in precious metals. I like it. Investing in precious metals.
White gold, baby. White gold.
There you go. Congratulations, Money Mitch.
Hey, thank you. Definitely was the best week of my life. So
awesome.
Hey. Blessings all around. Time to make that money back from the wedding, though.
I know. They think you make money on your weddings, and then you had to pay the bill, and you're like, no.
Oh, yeah.
Nobody makes money.
Time to get that money back. Let's go.
Let's do it. Congrats, Mitch.
Well, let's start with this Facebook report. The bottom line with Facebook is the report wasn't great, but it certainly wasn't horrible, right? I'll give you the high level numbers here as we get the chart up on the screen. There are daily active users, slight beat on that. Monthly active users just a smidge below the estimate, but more or less in line on both those numbers. The earnings per share beat. The sales was a slight miss. They talked a lot on the call about the same things they've been talking about, right, for the past couple of quarters, right? They're investing heavily in the metaverse and in that part of their business, and they're really not going to see meaningful revenue there for years. I think Zuckerberg said 2030 on the call is when they expect to see like meaningful revenue from that. Continuing to see challenges from Apple's privacy and competition from TikTok. But the report was not a disaster, and therefore that makes it good.
Yeah, I think everybody was expecting an epic disaster after last quarter, including myself. Like I said, I do have a small position in this in my kid's RESP, which is super small because you can only contribute so much to those things. That's in Canada. It's come back. I almost wonder if I should just dump it, get my money back, or get my kids' money back. I don't know. 15% seems like a pretty big move. It's been the kind of thing to fade the pops. 210, it's off the highs and leaking already here, Joel. I don't know. Sell the rip has been working so well. It's hard to say, oh yeah, I'm going to buy the rip today. So I'm definitely not buying it. I am tempted to sell it.
We were talking about this on at the close, and Spencer talked me out of like buying it into the print. And the only reason is it got tattered on Google's earnings. I mean, it had already been in a downtrend. It already, been getting beat up, and then it was down more than Google. And I'm like, and I'm like, that's not fair. But then I looked at
the markets.
And then I looked at the end of the day. I looked at the end of the day just for for fun. And I don't know if I said this to you or Dennis, you're on. Do you know what the 200 calls were going for?
No. Probably like $10.
No. It went out at 173. I think I saw him go off the board at like 330.
Is that all?
$3. Yeah, Dennis. Well,
really? I'm verifying this information.
What, the 200 call? That was 30 points away.
I know, but this is how stupid the market is. And we got the VIX up over 30. I would have thought $7 or $8 on them. Because $3.
Wow.
I would have thought $7 or $8 on that.
$7 or $8 for something a weekly?
Joel, have you not been in the? There's been crazy premiums here on everything. The one thing is, the premiums are just nuts on everything. But
I think it was around $3.50.
You're exactly right. It was $3.30.
Yeah,
seemed light to me. I guess you're right. It was $174, which was 20% out of the money. So I guess you're right. But
that's where
there you go again.
Yeah.
Here you are. You get the direction right.
Oh.
And you're not going to make money again, or at least, unless you shorts, maybe you sold the 210 and shorted it, and then you bring it in, make $8. But again, I always say it, if you're long options, which I never buy options, never, ever, really for any reason whatsoever, except when we have a pandemic happening. I never really buy options, especially with the VIX at 30. But if you're going to, use them, man. You got the puts. That means, okay, if you got the 200 calls, that means you got a green light to short the thing. You can short 210, exercise a call, you get $10. Or you short 210, you just hold on to the short, and in a worst case, you got the $10, but maybe it continues to leak.
You know what? A better thing would have been
options against. Trade the stock against your options.
You know what would have been better? You know what would have been, and I do this sometimes, but I don't. Like you probably could have done a $5 spread for $1.20. You know what I mean? And you got the defined risk. That would have been the way to do it. But technically, we hit 210 right on the kisser, and we've leaked. So, I mean, I've had these days where I've said, oh, well, I don't think it's going to take out the pre-market high, and it's gone and taken out the pre-market high. But I think it's really going to thicken up ahead of that 210. I don't know if you're going to get another chance to sell that.
I don't know if you are either.
If it does, in fact, do that, 214.16 would be my next level on the upside. Where to buy this thing on the dip, I have absolutely no idea where to try and buy this if you're trying to buy it intraday for a scalp. That's just not my cup of tea. But low expectations, got hit on Google. And here you are. Nice move, up 15%. Save the world.
Comment that I don't like about from the conference call, and this is read in your Benzinga Pro. Mark Zuckerberg, just reading it from the Pro. Mark Zuckerberg says expects to see meaningful metaverse sales in 2030.
Yeah, I'm the one that called that out. I'm
like,
yeah.
Is nobody paying attention to this? That's 8 years from now. You just changed the name of your company to Meta Platforms.
Yeah.
And you're not going to see meaningful sales in Metaverse until 2030, 8 years from now?
So wait, I'll give you the context for that whole exchange, all right? Because this is during the Q&A session, and he was asked about basically the run rate of this business, right? Because they're investing, they're spending a lot of money, right? They're investing in talent, in technology, in this new phase of their company. And so they were asked, Mark was asked basically like, how does he think about the, revenue and when they'll actually start to see that coming in? And he said, first he gave like two answers, kind of. The first answer was like they'll start to see some revenue like trickle in like 2025-ish, but then like it won't be until maybe like the end of the decade where they get like meaningful, like what he said, meaningful revenue.
Yeah, like the company's now making it on Meta.
Right. So
wow, it's a long time.
I heard that and my ears perked up because I was like, 2030, what year is it now? It's 2022.
It's a long time to wait for meaningful revenue.
Yeah.
Not me, and I would have hoped that they'd say profitability from their Meta sales. This is just revenue growth. I don't know. I am long this in my kids' RESP, like I said, and it is a tiny position. I'm almost thinking of just dumping it. But I put it in there. I've never sold anything out of their RESP. I put it in there because it was like, you get a little wild card, maybe Facebook Meta, maybe this Meta thing really works out 20 years from now or 15 years from now when they need that money for their university.
Yeah.
I don't know, man. What do you do, Joel? What should I do? You tell me.
Joel, you're on mute.
Joel's still on mute.
Where you own it?
I don't even 225.
Hold on to it. What are you going to do with it?
225, 2.25.
Where are you going to put it? What are you going to do with the money?
Disney.
No.
Sell Meta. I own Disney. I own a huge chunk of mine, but I was like, they love Disney. I was like, I might just put it in Disney. Well, I think Disney's a better meta play. To be honest with you,
you know what?
It's a sneaky meta play.
Just hold on to it. You know there's gonna be some Look at the continuation that it had after the bad earnings, the gap and go. What if it has the same kind of gets us wait for 240? I think you could get this at 240, get to the top of that gap. There could be a lot of
worried about getting their money back. It's so unmeaningful here. Like you can only contribute. So here's what you can contribute every year to your RESP in Canada. You can contribute $2,500 a year. That's the maximum contribution. Kid's 7 years old, so you can guess how much. I got like 4 or 5 stocks. So I'm literally talking a drop in the bucket. There is like no money in that because that's all you can contribute. So I'm looking at this. I kind of want Disney in there.
I have an idea. You ready?
I'm thinking about trading Meta for Disney today.
I have an idea. You ready? So
yes.
There are these things called target date funds, right? And they rebalance as you get older. So they start with stocks, and then as you near retirement, it's all bonds.
Yeah,
think about it.
Those are smart.
It's boring, but I know you don't do boring, but
that's smart. No,
boring. I don't know. Hold on to it, Dennis. Gap and go. I
think it's gonna be the gap and no go.
Okay. All right, but also another thing. Also, to people, we're already living in the metaverse. I don't know. I mean, I know we make fun of it. We already live in the metaverse.
This is the metaverse. 10% chance that we're just living in a simulation.
We are already in the metaverse.
10% chance that this is just a simulation we're living in.
If my dad was around, he would say, you're beyond the metaverse. He would say, you guys are, I don't even know what world we're living in. We're beyond. We're out of this world.
I'm seriously thinking about trading the Facebook for more Disney today. I guess we got lots of Disney.
Why don't you sell half of it? If you sell half of it, it will tank. That's what you do.
I don't mind selling Facebook, but why are you going to buy more Disney?
For the kids.
Oh,
they don't have any in their account.
For the children.
I guess they get my money eventually anyway.
For the children.
I'm literally like, I'm gonna be all in on Disney pretty soon. Like I'm just gonna be like, no. What do you invest in? Just Disney.
All right, I appear to have.
It hasn't been working well. I'm like totally Kathy Wooding that thing by just keep buying. Every time it drops 10 points, I buy a little more. It's the only time I've ever done that.
I appear to have struck a chord with that target date fund comment. Maybe they're not right for you. I don't have them either, but they are right for some people. Joining us now in the metaverse is Mark Chaikin, who is the founder of Chaikin Analytics, a longtime market veteran. Let's get his take on what's going on here. Mark, good morning.
Good morning. Let me just comment on the target date funds. They've reamed people's retirement plans in the last year. They're down 10 to 15%. Down.
Because bonds
are toxic, guys. Come on.
Yeah.
Nobody should own
Don't invest in bonds when yields are 1%.
Nobody should own a target date fund, in my opinion.
If you're young, it doesn't own bonds; it owns stocks.
Yeah, I know, but the people we worry about are our parents and grandparents, and they're getting screwed.
All right, fine.
What about Mark? Should I trade my Facebook in for Disney? I don't know if you heard that conversation.
I heard it all. We've had a bearish rating on Disney in the Chaikin power gauge since 150.
Yeah, but this isn't a trade. Do you think Disney 20 years from now, I'd buy natural gas stocks for my kids. 20 years from now, you buy natural gas stocks.
Well, who knows what? I mean, if there's a metaverse, there may not be a Disney.
I think Disney's going to be a big part of the metaverse.
This isn't going to help people make money here, Dennis.
You don't like Disney at all.
The power gauge doesn't like it. I'm neutral, but let me put it this way. If Joel's right and we're in the metaverse, why would you get on a plane with 4 kids, pay $150 a day per person to go to a theme park when you can do it all on a set of goggles? Come on.
Yeah, but won't that'll be Disney's?
I think so.
I think
you just built my case.
It won't be Disney because their management has become very slow since Iger is out. So it ain't going to be
I like the metaverse.
He's out for a year. What do you mean?
Well, then look what the stock's done in a year.
I think that's a fabulous idea Mark Chaikin just came up with. You put on your goggles and you go to your Disney amusement park for like $30 each. Everybody puts on their goggles and go around and do the whole theme park.
Let me give you an example. I just came back from Paris last night with my wife Sandy and some friends. They went to 5 museums in 8 days. I went to 2. But to see the Monets that they went to see at the L'Orangerie, I put on a set of not goggles, but I went on the internet and I scrolled through the paintings. The metaverse is going to make that a much more robust and rich experience. This is just
hold on, time out. You went all the way to Paris, and then you decided when you're there, I'm going to just go on the internet and look at the art on the internet.
Well, I went to 2 museums. I've seen these paintings before, so to see them with crowds, another time. But the point is, you can do this on the internet. Fair enough. And the metaverse is just going to make that richer. But let's get to the market here. I think you need to look at 2 stocks to understand what we're going through and what's going to continue. One is Qualcomm, unbelievable blowout earnings. Don't know if you've talked about it. 41% increase in sales, 10% above estimates. Phenomenal. And Teladoc down 45% because they have no revenue.
I know the power gauge is bullish. Teladoc.
and they have no earnings after 20 years in business doing telemedicine, and after the pandemic. That's what this market is all about. You've got to own stocks that have earnings and growth prospects, and you've got to avoid the Cathie Wood stocks. This is not over for those stocks.
Do you think, and I was seeing this on Twitter going around, and I kind of believe it, that there is just like a witch hunt on her stock specifically now? Because it's amazing. Like you look at all of her holdings and they're all just getting really hit hard. Either she's the worst stock picker or there's just people just selling the ETF and selling the stocks right along with them.
Well, it's chicken and egg. Are they going down because they have no earnings, or are they going down because people are, doing bear raids? I think it's a combination of the two. But interestingly, as of 2 days ago, she still had 11 billion in Ark K, which means that her, true believers haven't cashed out yet, which is quite amazing to me. And so I think I've said it on the show. I don't think the tech stocks will bottom out until Cathie Wood's true believers, the people with 11 billion in that fund, puke it out. And I think that comes around $40, so 20% below. But Teladoc is one of her 3 largest holdings.
Number 2.
Or was.
It's actually
number
her.
2.
it's actually, if you combine all of her, the 1, 2, 3, if you combine her 6 active funds together, Teladoc is number 2. It's behind Tesla.
Right.
It's the second largest
Right.
holding. It's ahead of Coinbase, ahead of Zoom.
Yep.
And I just want to note the comment that Mark made about the lack of earnings. I mean, in addition to the fact that they lowered their guidance, but their adjusted EBITDA went down year over year.
Right.
EBITDA is your earnings before a whole bunch of accounting crap, right? And their EBITDA went down. That's the wrong direction. You want EBITDA to be going up,
Right.
not down, especially in this market.
But that characterizes her whole portfolio.
Right.
Unfortunately, I own only one stock in her portfolio, which I've talked about, Unity Software, and that's going down, making new lows.
Yeah.
So, but that's my metaverse play. But in any event, I do think that energy is still the place to be. I'd buy, the small dips that we've just seen, and stocks like EQT, which is a large natural gas producer. I'd buy Oxy on this dip. I think, Warren Buffett knows what he's doing here, and I'd look for some of the smaller energy plays if they pull back. Whether inflation's topping out or not, I think energy is in a long-term uptrend cycle, and I would continue to play that.
Yeah, just a remarkable day here for a lot of these stocks. And since you mentioned Qualcomm, we're gonna have Qualcomm on our channel on Benzinga Live tomorrow afternoon. It was an incredible quarter. They beat across the board and they raised. This is coming on the backs of several chip manufacturers lowering the bar. They're coming out and said, yeah, we're still seeing supply chain problems. We're probably going to see it through the end of the year. And Qualcomm beat across the board and raised last night. So
they beat in all 4 of their product categories, and their biggest growth was in Android operating system phones. Yeah. So that's sort of interesting.
Just tremendous.
Yeah, it's a great quarter, but it could be any of these stocks. If you've got earnings and you've got growth, then eventually you'll find a bid. And Dennis knows that better than anybody. You got to have natural buyers for a stock. These Cathie Wood stocks have no natural buyers. Why would you buy a company that's losing money and shrinking EBITDA? So, but if you translate that to the overall market, we may get a bounce here. I look back 2 weeks ago, we were at about 43.90 when I was on the show, and we were looking for a bounce. And believe it or not, we were at 4,500, 2 weeks ago. So I don't think we're done yet in the tech stocks, which means we're probably not done yet in the NASDAQ and the S&P. But right now, we've got to get above 4,400 to break the downtrend, and that's going to be really tough.
It's basically
really tough.
It's basically, Mark, impossible to make a call today because you got Amazon and Apple tonight. And I mean, we saw, here's the S&Ps closing and coming back down near the lows of the move, and one report from Facebook, and boom, we're up 60 handles. I mean, this Apple and Amazon report means everything.
Yeah, well, yes, but can they hold a rally? That's the thing. I think Joel was just talking about that. Can they sustain a rally? And so far, the answer is, but other than that 10% rally off the March 7th bottom, no, they can't. So that's pretty tough for traders, and for investors, you've got to determine what your strategy is. Long term, stay the course. Maybe you go to 3,800 worst case. In my view, 4,000 best case, but that's still 5% below where we're trading right now. And you've just got to be prepared for that, in my view. It's a tough market. On Monday from Paris, it's interesting when you see it from a different perspective. You see the German markets open at 3:30 our time. You get a more detached view. And my comment to my colleagues ahead of the earnings on Tuesday was, if they react badly to the earnings, Microsoft and Google, it's going to be a replay of 1987. Unfortunately, that didn't happen, but it felt on Monday, the way they closed them, or Tuesday, I guess, ahead of the earnings, that it sort of felt like 1987 to me, where you could get a washout. I think a lot of smart people are looking for a washout. Maybe you get it, maybe you don't.
We'll find out. Mark Chaikin, founder of Chaikin Analytics, founder and creator of the Chaikin Money Gauge, Chaikin Power Money Flow, Chaikin Power Gauge. I'll get those right eventually. Mark, always a pleasure. We'll talk to you again in a couple of weeks.
Wait, Joel, I think I cowed you into submission here. You've never been so quiet on one of my calls. What are you thinking?
No, I just listen to what I just like the whole scenario, the whole 3,800 thing, 3,800 to 4,000. I just I don't know. It's a long ways down from here. So I don't.
It's 2 days of algo trading, basically.
Yeah. I mean,
it's not funny.
I don't see it. I mean, to me, you got rock solid support here. 4,100. So I can't think about 4,000 or 3,800 until you bear down, you take out 4,100.
Think about this as a parting note. We've lived for the last 6 years with Tina. There is no alternative to stocks because interest rates were at zero. But look where interest rates are now. There is an alternative now. So it's not a given that the bid is solid.
Trading range.
To your point, Mark. I just, was looking, they call them GICs in Canada, Guaranteed Investment. A 1 year GIC was 0.8% going back a year ago. Nice. 3.3 now. 3.3.
Wow.
That's not bad.
Well done.
As they say in Montreal, pas mal.
What'd you say? 3.3?
3.3 on a 1 year.
Well done. Look at that.
It's something. I mean, it's not nothing.
Better than losing, right?
It's not nothing.
By the way, on this rally, I found late to the game, there's an ETF, and I have to get the symbol, but it basically is an anti-beta market neutral ETF, and it's done really well in this environment. Now I'm late to the party, but if we get a significant rally in tech, that's a pretty interesting way to play the market.
What's that one?
Get us the symbol for next time, all right?
Yeah, I thought it was BPAL, but it's not.
All right.
But it's a really interesting way to play a market that's shifting from high beta to low beta, from growth to value, and so forth. So
that's all I do is market neutral. That is me. That could be.
I'll text you the symbol.
All right, and then we'll share it. Mark, have a great one.
We'll talk you too, guys. Always a pleasure.
Thanks.
Hey,
you don't like my Disney. You don't like the metaverse.
Dennis, I like Disney, and even I'm saying don't buy Disney. Okay,
and why are you saying don't buy Disney?
Because you already because
I already own too much Disney.
Yeah, yes,
I know.
That's what I'm saying. Okay,
hey Dennis, heads up, jobless claims coming. I know it's not.
Oh gosh, go wide.
I don't think it's gonna.
Joel,
not going to move the market.
I just don't want him
stay out there.
He hasn't been complaining too much yet.
Last thing on the Kathy front, and then we'll move on. But this is so interesting to me. I was looking at the flows into the Ark family of funds. Guys, look at this. This is data from FactSet. And this is year to date, so only for like a little under 4 months, right? Major outflows in the ARKX, in the space ETF, in the KW, in the KG, in the KF, serious outflows there. But look at the KK, $650 million of inflows. This fund has taken in as much as all the other ones have lost combined. So she must have some institution that has an unwavering belief in her to be able to be for there to be net buying action into this fund despite its incredible underperformance, because this isn't retail. Let's be clear about this. $650 million, it ain't retail. It's someone big, because clearly people want out of her other funds, but the flagship fund, someone is going all in here. So just a remarkable dichotomy there between the KK and the rest of the family of funds, because there are net outflows, but it's just the one, the KK.
The market still loves her. They still believe. True believers.
Yeah.
$48.92. So this is the everything rally. Everything is up today. And I mean, not everything, but mostly everything. I'm looking at my screen right now. There's a couple of red spots. Comcast, Caterpillar, which reported earnings. Also MO. Also, those are defensive stocks, and that's maybe why they're down. Amgen's down, which we haven't got into yet, which we'll get into in a second on IRS problems. But the majority of stocks, talking like 95% of stocks are up today. And then you go to ARKK. and not participating. And we know why. We all know why. Teladoc now down, and we have to talk it right now, down 44. It's down, down 44%, down 25 points after already being killed. They lost more money than the share price. I mean, this is impressive. They lost $41.58. I guess
how do you lose
one-time charge. But I mean, the stock's trading at 30, and they just lost $41 that quarter. That is impressive.
How do you lose that much money? Holy man.
On Teladoc, yeah. So again, the big thing is that they lowered their guidance, right? That was at the top of the release. Okay, so the earnings per share, again, as you said,
the little thing's the $41 per share loss.
47-cent loss per share on sales of $565 million. But again, the forward-looking numbers, the guidance was lowered. It wasn't even lowered by that much, but that's besides the point. You can't be going the wrong direction. And that's what they're doing. They're going in the wrong direction. I went into the release because I was curious as like how they phrased it, and it was the very top of the release, essentially the very top of their earnings PR. Had this whole paragraph from the CEO. We continue to see growth. However, we are revising our 2022 outlook to reflect dynamics in the direct-to-consumer mental health and chronic conditions markets. Then he goes on to explain a little bit, why they're seeing weakness in those markets, higher advertising costs and elongated sales cycles. But regardless of the why, what matters is that they're doing it. They're lowering their guidance. And I mentioned their EBITDA going in the wrong direction. And you can't be doing that. You can't be doing that.
$31 back to 2018 pricing here. This company's got major problems. I'm not going to be a hero and try to catch the falling knife. We know Kathy will probably back up the truck and buy a whole boatload today if she has any. Maybe she'll sell her winners to buy more of this loser. $31, man. The only thing to consider, you got to always think, and people are like, oh, it's 300. Now it's 30. What can I lose? In a stock like this, you can lose it all. So I'm not saying it's going to zero, but in the hypothetical situation that some of these companies actually might not make it, TDOC, if you bought at 300 or you bought at 30, the $30 buyer is in just as bad a shape as a $300 buyer if it went to zero, because you'd lose all your investment. So, I mean, I don't know where this stops. I don't know if it's a zero, but I don't know that it's not a zero when they're losing that kind of money and the sales are not growing and they have no path to profitability, at least here in the short term. I can't touch companies that aren't making money right now. Kramer says a lot of dumb things, but it's one thing he says right, and he's absolutely correct. Right now, this market wants companies that are profitable.
Yeah, and that ain't this, unfortunately.
That ain't this. So you can buy hopes and dreams, and that we're all going to be talking to medicine. But again, you can get a hold of your doctor on Skype. You can get a hold. I mean, what is, it's kind of like.
I was just gonna talk to
Lisa
that.
does how many? Lisa was doing lots of calls, probably.
Oh, I know. One thing that
she didn't have to go through Teladoc to get to her clients.
Well, here's a couple things. Number one, if you were trying to buy the stock at 31 at the end of 2017 and early 2018, you had two monthly lows, 30.85, 30.88. Well, you're getting that opportunity now. So and you got a quiet buyer here. So just, they're just letting the bid get hit on their bids. So so there it is. There's some monthly support. The next monthly support comes in at 27.30 after that. So I'm sure you'll get a little bit of a pop sometime during the day. But that's what I'd be looking at. I personally own this one. And Lisa uses it all the time. And I don't know. I own it at like 50. I wanted to sell it so many times, but it's a small position. And it's so what that enabled her to do. Well, first of all, she could charge for phone calls now, which she never has before. Nice. And so what this app allows her to do, and I'm sure you could do this on other things, is that she could call someone through this Doximity app, and it's coming from her office number. It accesses her records much easier. So whatever, it probably doesn't make any money. It'll probably be just another loser, but that's what I own, and I'm down money on it. Not really. Not too worried about it.
We're all down money on a lot of our investments right now. Thank goodness for trading, because I tell you, my trading account's done very well this month. The investment account, not so much.
You look at it too much.
Let's talk.
Ready? The investment account?
I want. Yeah.
If I don't look at it, will it do better?
Yes.
Yeah.
Yes. No, it doesn't seem to be the case.
Yeah.
I want to start trading. My buddy Mike from Nashville said maybe you should start trading full time your investment account. I was like, maybe I should.
Yeah, but Dennis, the difference is if you don't look, then you won't know.
Dennis, you don't. You know what, Dennis? This is the end of this discussion because you don't short in your investment account. Okay, all you do is buy.
I know.
So unless you're going to be willing to short in your investment account, then you're not going to be able to. You're not going to be able to do it. So just either get flat or start shorting in your investment account. You make some great short calls.
These S&Ps are leaking big time, man.
I know.
This is not great news. I mean, there's good news and there's bad news, and I don't know. We're leaking here. We're slowly leaking.
They didn't like the GDP. They didn't like the GDP.
They find reasons not to like things. This market.
That's what I said. I wanted to buy it last night, and now I'm looking like I don't know where to buy this thing. You're already. What are you going to do? You're not. I mean, if we come back down to the last half hour's print, yeah, maybe that's another 17 handles, but now it is. That was just too much too fast. I mean, before the close, we ticked 41.70. We were really choppy. So at 42.60, that's a 90 handle rally. On what? On nothing. On a Facebook beat? It's absolutely nothing. I think, Mark mentioned his 3,800, 4,000. I think what you're going to do, I think if for the bulls is you want to see a trading range and just maybe the trading range is going to be coming down a little bit. Maybe this pop from 4,100 is only going to take us to 4,300 and then kind of work our way down. But, no, we're still a long ways from getting out of the woods just on, look at things on a monthly basis.
When's Sean coming?
8:50.
10 minutes. We'll
have
have
10 minutes till Sean Udall.
My mistake for not warning about GDP. It was the first reading for Q1.
Yeah, and I bought a lot of stuff there.
And it came in a little bit light. I want to talk AMGN, though. AMGN. This one is interesting. So let this be a lesson. And sometimes you really got to scroll down into the releases, like really scroll to like the bottom of the release, because this detail was buried in there on page 7. Below all the headline stuff, page 7 of 22, there was a section titled U.S. Tax Petition. And by the way, the IRS is auditing us for the 3-year period, 2013 to 2015. And the IRS says that we owe them $7 billion of back taxes and penalties. We don't agree, but that's what the IRS says. So $7 billion. The whole thing is tied to Amgen's tax status in Puerto Rico, whether they incorrectly, utilize that. But that's more money than they made in revenue all of the last quarter. So this is not chump change.
And the market's punishing them. They don't like this IRS audit. We're off the lows, 239. This has been a stock that is a very low beta. This is a stock that has a nice dividend. This is a stock that even if they have IRS problems is not going out of business. This makes money. It makes real money. What's the PE on Amgen?
Let me check.
10 maybe.
10, 12. Real companies, real money. Stuff you kind of want to own.
The forward PE on Amgen is, come on, computer, work for me. You can do it. 14.
14.
Yep.
I mean, the problem is PEs and biotech and the big majors range from like Gilead down at like 6 to like Biogen to like 8 to 9 to 10 to 14 is kind of actually a little bit on the expensive side for, believe it or not, in these big biotech companies. But you know what? You're pulling back. I think you'll find buyers 230 to 240 area. And if you're going to buy this on this pullback, I won't argue with you because you know what? They pay their tax bill. It's a one-time thing and they move on. This isn't something like the core business is in trouble, just the way the tax was set up. But, maybe you want to wait till the dust settles. It's going to get some headlines here today, but I kind of am inclined to buy this dip. I never buy anything, but I'm kind of inclined. I don't think I'm going to, but I think, I'd rather buy this dip than a lot of other dips. I'd rather buy this dip than the Teladoc dip. I'll tell you that.
Yeah.
A lot of money, $7 billion.
It's a lot of money. It's
you got to
scary.
let it shake out, I think, for
Shake
a
it
couple
out?
days.
All right, I'll
We'll
go with that.
see. Yeah, I mean, who knows? How would you like to be that pencil pusher though for Amgen, and you get a knock
Getting
on your door?
fired, man.
Yeah, hey, we got a little problem here from the IRS. Real
Little
7 billion.
notice.
Yeah, that's why.
You
That's
might
why.
want to open this one. Sit down for this one.
Look at we bounced right back. Look at that. Buy the dippers. We
Yeah,
had a
buy
little
the
dip
dip.
off
Can't
the
break
GDP
those
number.
guys.
We'll
Yeah,
see. We'll see what
yeah.
happens. I don't know. I'm not. No levels are jumping out at me in Amgen right now, so I'm going to pass on that.
All right.
All right, we have about 30,000 other earnings reports
Let's do it.
to go through.
You can do them all.
I mean,
One a second.
I'll sort of take questions here because whoever you want, we can go to PayPal, we can go to Twitter reported this morning. Not that it's relevant, but the stock did actually bump up higher on that report. It's completely meaningless, but I thought that was interesting. Turns out it wasn't a disastrous quarter. I was just curious to see if it was going to be a disastrous quarter.
Yeah,
and it wasn't. But that's all. I just want to see. I was just curious, but it means nothing for the stock. Obviously, if the deal goes through. Let's go with Ford. We talked about GM yesterday because they reported Tuesday after the close. Ford reported last night.
Yeah.
The earnings per share came in. They beat by a penny. Sales beat 34.5 versus a $31.2 billion estimate. They did also reaffirm their adjusted EBIT guidance for the year. And those are the highlights.
I hung around too long in my second half of my Ford position. We know I bought it at 7, watched it go to 25. Sold some at 18, sold the rest of it at 16.25 5 days ago because I didn't want to go through the report. The report's okay. Actually, the report is fine. I still think, and I'm going to go right back to that argument, who the hell's buying $95,000 pickups in Canada? So I think that even though you had a few buyers last quarter and they're saying the guidance is okay, I don't know if it's going to be. I think it's people buy that Lightning. But that's a little ways away. I'm concerned about the next year before really we want to get some significant EV sales. When are they supposed to actually start selling the Lightning? We've heard about it for so long. Do we have like projected date of like when these things are going in production and we're actually going to see these things on the lot?
Question.
That's what I want to be back in for.
They're expecting to release it in May. This May.
It's supposed to come out right away? Like the truck's in production right now?
Yeah.
Oh, I didn't know it was that soon. Oh. Well, maybe that changes my mind. But
because I think orders opened up last fall.
Yeah, I didn't know. I thought it was still a year away.
No.
Oh, well, that's good news.
Oh, wait a minute. They said April. Wait a minute. That was Tuesday.
Ford Lightning.
Well, you guys are trying to figure this out.
Give us some technicals.
You got to spike almost to 1550, and then you had a little dip, and then you spiked again to 1540. What's sticking out to me right now is where we're trading right now. We're up 29 cents at 1514. We got 3 daily highs right there, 1510 to 1520. If they take that out, boom, right away, that's low for the area. You work your way up to 1550, 1560. In the event that they clamp it down there and they can't, then maybe you get a shot. Where was the close at? The close was at 4. I don't think you get to see the close, but yeah, let's see what happens right off the hop. I don't know if there's some paper there or whatever. Maybe they'll pull it and try and sell it higher, but 3 highs in the same area. Clear that, you gotta. I don't know how much you risk reward if you're trading Ford and scalping it or whatever, but that's what I'm looking at.
Yeah,
see if it can clear
the Lightning is coming off the line, Dennis.
Yeah, they started production. It looks like just in the last few days, actually.
Yeah.
So it's just starting production here.
There we go.
That's good news, though. That's a good news. We do have that to look forward to. I thought that was farther along.
No,
I still am concerned just on the legacy parts of the business here, GM, Ford, and all the automakers that. Less discretionary income means less buying $95,000 pickups, but I'd like to buy the Lightning. I think there will be some demand for that. There will be a story here. I'm just, let's let the market dust settle here, but $14. If you're long-term Ford, you're not bad at this price if you're real long-term.
Okay, let's go. We got a couple minutes before we're going to have Sean Udall on. We were asked about Peabody Energy, BTU. They reported earnings this morning. Let me give you the numbers here. GAAP EPS of an 88-cent per share loss. I don't have an estimate for that though. Sales came in. Sales is okay. They made over $1 billion in sales versus $650 million a year ago. So a very nice year-over-year increase in that. Let me go look and see what the estimates were. Okay, it looks like that sales number came in just a little bit below where the consensus estimate was, which was around 1.1 billion, and the actual was 1.04. So just a smidge light on the money coming in the door, the top line revenue. I mean, stock's gone parabolic in the last couple months.
Yeah, why is this one all of a sudden, like, I mean, it's not like Peabody Energy is a new thing. I mean, the stock went from $47 down in 2020 to 80 cents, and now it's the stock that everybody has to own. I don't follow the story close enough to know why this story for this specific stock got so hot. Maybe somebody can enlighten me.
Well, wait, didn't they re-IPO'd, right? Because my chart only goes back to 2017.
Oh, I've got further than that.
I think they.
No, 2017. Yeah, they re-IPO, but it was still $47 in 2018 and went to 80 cents in 2020. So it's been a good winner if you're buying this thing in 2021, 2020, 80 cents a dollar when you thought it was going off the board worthless. Like boom, back. But I don't know if this is like a retail darling, like a Reddit thing.
I think that's part of it. I mean, there's not that many well-known natty gas plays, right? And this is one of them.
Yeah, so they all jumped on this bandwagon. Ugly move here. It looks like it's topped. It looks like a head and shoulders. Gonna look ugly. Boom. Neckline broken. Break the neck of this thing. This looks like a broken chart to me. I'd sell all rallies.
It's tough. Traded down $4. Give it back half of this move since February. Just like that. Give it back half of the move. Don't know where to sell it, but this area, maybe not today, but I see this area under $20. There's 3 lows in the same area. So I'd be prepared on this down move for a test at 19, just the way it's trading right now. But if you're have a short, trying to cover a short, maybe throw that bid out there at 19, see if you get hit. And then if it starts to thicken up during the day, you see if buyers are coming in. Because it is halfway back, just like that. It's giving back half of the move. So 50% are good. It happens very quickly. It might be a little bit better. But longer term, I could see this thing in the 19 to 20 range, and then maybe get a sustained rally off that.
This is cool.
You guys want to see a crazy chart, Joel? Why don't you bring up the dollar yen, USD JPY? Okay. I don't know if I'm assuming you get Forex quotes on there.
And I get the yen, and now you want me to bring the dollar up with it?
Yeah. Well, either way, just look at that chart. The Japanese yen is at a 20-year low, and on a real basis, accounting for inflation, it's at like a 50-year low, because the Bank of Japan is tanking their currency right now.
Wow.
That's a crazy chart.
Wow. Why is the Bank of Japan doing that?
The Bank of Japan is keeping rates at zero, going against every other major central bank.
Yeah, so you go back to economics classes, and money flows to higher interest rates. It moves from one country to the next, chasing rates. So it's not surprising, actually, if they're not. I didn't know that they're tanking their rates still.
Yeah.
Yeah, they're going against this. Ouch.
Well, I mean, I think this is a whole out of Europe. Well, Japan's not Europe, but the euro dollar.
The dollar is going parabolic against the yen.
Yeah.
I mean, this is the craziest chart on Wall Street right now. Is this yen chart? It's falling off a cliff.
Yeah.
Anyway, I just wanted to bring that to everyone.
Yikes.
Yeah, just crazy, right? Hey, let's bring on our next guest here. It's been a minute since we've had Sean Udall on the show, and we got a lot of tech to discuss. So we figured, hey, why not bring on the tech stock strategist? So let's bring Sean on. Sean, what's up, man?
Hey, just navigating the running market crash, the greatest growth stock debacle in modern days.
Yeah.
What?
If you raise cash, you kind of avoided part of the crash. It's hard to avoid the whole thing. But anyway, I wanted to talk about what Spencer. I just heard Spencer saying. So here's the next thing we're gonna have to deal with. Is a very strong dollar hurting results.
Yep.
And in fact, most of the weakness, like we did have official tiny misses from PayPal and Facebook, but most of the misses last night, especially on forward guidance, were basically due to FX headwinds. So So it depends how big of a deal they're going to make out of this. In 2015 and 16, a strong U.S. dollar was a huge part of tech weakness for a few months. So I would say since we've crashed, I don't know if they're going to make a big deal about this time. Mm-hmm. However, they could. So it's definitely going to be a headwind. It's definitely going to cause revenues to be a little bit lower.
So, all right, Sean. Well, all right, Dennis, you want to?
Yeah, I never get a chance to. You're with Sean.
Oh, you never get a chance to
talk. For a while. I love Sean.
That might be the statement of the year.
Yeah,
that might be the statement of the year. Okay, go ahead, Dennis. Go ahead.
So,
you're wearing a shirt
Sean,
with my picture on it.
I am sitting with some cash here, and I am looking for some tech stocks to maybe come into here. Give me. I know you're contrarian, so I know you're probably doing a little bit of shopping in here.
A little, yeah.
Just a little bit. What are you shopping? Okay, so tell us first what.
Well, here's exactly what I've been telling. Like I was posting this just last week. So I haven't been on for a long time. I got pretty bearish months ago. I mean, I feel like right now everybody on CNBC is saying exactly what I was saying November of last year. So that's probably a good sign. The problem is I'm not so sure we're done. But here's exactly what I said. I think we have a window of somewhere between 2 and 4 months. I'm gonna guess 3 to 4. It could be sooner earnings are just really strong, but I think we have, let's just call another quarter where I think you can start strategically, investing, getting closer to fully invested over the next 3 months and building positions. I think you're going to have pretty low prices to buy, at around recent lows. Whether this is a successful retest or not, I'm not sure. I still think the S&P should be down 20%, and it's only at the bottom. It was only down 15%. It's one if the S&P was already down 20%, we'd already have a bottom that would have stuck. That's still been the issue with the whole market. But so here's a couple names. Something like a Fastly. Fastly is something I think is going to start having a string of good reports versus bad reports. It was kind of put into the COVID pull-through camp. I'm not really sure that was the case. I just think Fastly had a really good run of quarters, and it just went up way too much when tech stocks were going up, right? What did what you guys can look at the high, the 52-week high is not the high anymore. You have to go to a 2-year chart. I want to say that stock hit 130 or something, which was crazy.
$136.
Okay, there you go. Complete bubble valuation.
Yeah.
Again, 15, 16, anything under 20, I think is a good buy. I can't guarantee it's not going to go to 10 to 12. But this is a stock I can value to between 50 and $70.
How do you come up with
reasonable
that?
valuation?
How do you come up with the 50 to 70?
Any of them, cash flow metrics, price to sales metrics.
Because right now they're still losing money, but are they projected to be eventually making money here?
Oh yeah, you look at at one point Palo Alto was losing money, right? Yeah. At one point ServiceNow was losing money. So there's plenty of techs. I bet if you were to look, I bet they've been cash flow positive for some time. They have a great balance sheet. So if you want earnings, that's a tougher thing because stocks with the low PEs are probably the stocks I'd avoid, frankly.
Right? Crowded trades there.
Yeah, I almost think the dangerous stock, it's like the 2008 trade. I remember people were buying stocks with low PEs, and a lot of those stocks ended up having to declare bankruptcy. So and that wasn't tech. Tech had the best balance sheets in 2008. Tech has the best balance sheets today. So yeah, I don't know if I'd use earnings, but here's what I said. There were stocks that were trading on, let's call it 15 to 17 to even 30 times forward price to sales. Okay, that was literally 8 months ago.
Yeah.
You have stocks that were, and then the better valued stuff was sort of in that 9 to 15 range. You have stuff that was trading 12 times sales that's trading 3 times sales now. So tech M&A usually, again, I'm broadly generalizing because everything's different, calibrated for growth and whatnot. But tech M&A generally comes in around 10x, 10 to 11x, right? So if I can buy stocks at 2 to 3 times sales, especially if the businesses are growing 20, 30, or even 40%, I'm getting prices actually that are heavily discounted versus 2016 tech prices. And if you recall, in 2016, everybody thought the market was going to be crappy for a long time. Once the Fed basically blinked, tech took off. And tech really led the market for the better part of 4 or 5 years.
Should we wait for the Fed to blink, or should we strike now?
That's your $1 million question. You tell me, because okay, how many 50s do we have? If you can tell me with certainty that the Fed, after they do 2 50s, that's already a huge mistake, then you probably should be buying tech now. If they have to do 4 50s, then I'm wrong, and we don't have 3 months to buy stocks around really good, cheap, low prices like we have today. We might have another 6 months to buy them. So if we have 4 50s, I don't know. I have a hard time believing stuff at 2 or 3 times sales, though, is going to go to 1 time sales. But it might not go up much, and holding stocks that are already beaten up to the tune of 80, 85%. Again, I almost think you got to take away this whole talk about, oh, a stock is down, blah, blah, from all-time highs. First of all, who bought the stock at all-time highs? I didn't buy anything at all-time highs. But, I think you almost have to chop a stock in half and say, look, Fastly at 130 was crazy. So if you bought it there, you're going to lose a ton of money. So, what's something reasonable that somebody could have made a mistake and bought it? Okay, 55 to 75. It's still off massively from $55, right? So
hey, Sean, I want to hop in here. I want to hop in here.
Oh, I was going to give him 3 more names.
I want 3 more names.
No. Back in your cage. So this is Sean. Sean, you wanted to come on today. You called me yesterday, and when Sean texts you and says, "Give me a call," you got to block off like 15, 20 minutes, a half hour, right?
At least.
So I called him, and you made a call. You flat out made a call.
I said Facebook was going to be good. Nobody thought it was going to be.
Yeah, but you said you thought that was going to kickstart the market, and that you were kind of spiny bullish, and that you were kind of calling a turn here. So is this, we got the spike off the Facebook, and then now we're getting a little pullback here? I mean,
so let's talk about
6 months. I mean, I want to know what to do like today, because you were so bullish yesterday. Is that rally over?
Well, you're mischaracterizing, but you got the story mostly right. So I do think we could get a window. I think we'll have. So what we did, like when the market went up for about 3 weeks, for 4 weeks ago or something, from the March lows, we had a risk on trade again. It didn't last real long. I think it was 8 trading sessions basically. Right. I think we could have one of those again. So when I specifically said text, the NASDAQ had gone from, I think, plus 150 to red. And I'm like, oh man, so I texted you and I said, hey, if Facebook is good, which nobody expects, I think we're going to get a turn in the market. So I do. I don't know. Do we have our typical 1,000 points to 1,200 NASDAQ up, and then you got to sell everything again? We could. But I would say, though, I would look for things that probably are not up in the pre-market, but had made strong moves that last time, like a firm. A firm went 27 to 50. Okay. Yesterday, what was the low? Probably low 28s. Something like that could move. By the way, I think Lending Club actually had surprise. I barely look at that. I think they had a decent report. Something like a SoFi might work for a couple points. Okay. Something like, but that's not what I was talking to Dennis about. Although SoFi is a great long-term accumulator.
I'll let you give.
But no, I do think we have to answer your question. I think we have a window. I think we got way overly pessimistic again, and we'll see. I think the GDP just come in. As somebody pinged me, the GDP just come in negative for Q1.
Yeah, it came in bad. So that's
okay.
All right, good. One more thing, and then I'll let you give a couple other stocks.
Sure.
Why do you think Twitter's trading such a discount to the takeout price?
Great question. I'd love to know.
Well, I think the biggest reason is it's completely funded by us one person and what looks like margin loans. Now, I'm sure he has the financial capacity to cover it, and if he ever IPOs SpaceX, he'll have another huge pool of money to deal with. By the way, he did just get partially monetized. There was a private funding round on Facebook with our SpaceX, which valued it at 100 billion. So Musk probably has a little more money than people think, but he's basically funding a $40-some billion buyout.
You know why I think it's why it's trading at such a discount?
You tell me.
I'm hearing rumblings that shareholders are going to turn down the vote.
I would say there's fairly good odds of that. I mean,
why would they sell out? This company is so underperformed. And why should they sell out to Elon Musk at 54.20 when this should be a $20-30 billion company?
Well, if you sell out, you're getting nothing. So if he turns it into $100 billion company, nobody's going to benefit from it. Yeah. You have a choice. You can vote no, or you can take $54. I guess the reason you would vote yes is you just think the stock's going to go back to 30 or 31. I mean, they just reported the results were okay. I actually think Twitter had a lot of good things going for it. I mean, Twitter would have gotten back to 50 on its own just whenever the market gets out of the crash mode. Like a moderate bull market gets Twitter back to 50 to 55 anyway. So, I mean, Twitter was not an overvalued stock, unlike Fastly, unlike Nets, unlike insert 100 stocks that were massively overvalued a year ago. Twitter was not really one of them. So,
all right, hey, I'm going to let you stay on with these guys and give a couple more stock picks, but I want to have you out here this summer, man.
Yeah, but anyway, you take 54 because you're worried it's never going to see 54
We're going to play some golf. We're going to do some market education. You're coming out here this summer.
Let's do it.
All right, I'll check in with you guys later.
All right, Sean, and we got to bring on our next guest, so we got to hop.
We got to get the two stocks. Who's going to give
us I know. I'm giving you a chance.
So this is, Dennis, here's a combo of one that should work better long-term, but short-term, Pinterest could have some follow-through. And I almost wanted your read on Pinterest, actually, because I actually think this is a case. The stock has basically delivered 2 quarters in a row after being decimated with expectations, frankly, that they were going to blow the quarter 2 quarters in a row, and they've actually delivered. So you tell me, but I think this could actually have decent extension. I wouldn't be surprised to see Twitter go to 28 to 30 in the next few weeks. What do you think?
Wait.
Pins.
You scare me.
My wife indicator tells me no because she used to be on Pinterest all the time. Now she's on TikTok, so I'm scared. I'm scared of Pinterest.
Okay.
So I like your Fastly. I don't really like your Pinterest so much. What's your next one? Because we don't have any time. I want to know the next one. I got Fastly written down.
I'm gonna go back to Affirm. So, of course. So by the way, this is a great. I mean, I got a great trade on this recently. I got stopped out of it, but it was a trailing stop, which is great to get stopped out of, right? Yeah. When you have gains, you insert trailing stops, you move them up, you get stopped out.
Yeah.
Affirm. So here's the thing that most people probably don't understand about Affirm. And you could probably throw SoFi in and some of these other things. If we actually go into a recession, does Affirm's TAM, total addressable market, go up or down? It actually goes up, right? So people don't get it. But what was SoFi's whole business built on? Debt consolidation loans. Why do people need debt consolidation loans? Because they have too much debt and they don't have the income to pay it off. Okay. So if the Fed puts us into a recession, which nobody wanted to talk to me about that 6 months ago. Now everybody's like in the camp that that's going to happen. But if that happens, the TAMs for these companies that do debt consolidation and alternative payment methods and things, the TAM increases hugely. It doesn't decrease. Look at Square in 2016. Everybody hated it. I'm just going to end my Affirm long-term investment discussion. If you don't think Affirm is as good as Square in 2016, then you need to keep researching the stock.
Would you buy Square here?
I have traded Square. I did buy Square around the March lows. Again, that good trade. I don't have it today. You know that if PayPal really hooks in, I actually think Square would go up more than PayPal.
All right, we gotta hop. We gotta hop. Sean Udall,
stuff, Sean.
TikTok Strategist,
okay, guys,
giving us picks.
I wish we had another 20 minutes with Sean.
We would never have enough time with Sean, but I got to bring on our last guest of the day, the Einstein of Wall Street, Peter Tuchman. Peter, good morning.
What's up there, Spencer?
A lot going on here today. We were up across the board. We've been leaking for a little bit with the weaker than expected GDP print. But what is your take overall here? We had a pretty rough go of it last week. Pretty nice rally overnight. Thoughts?
You know what? I look, I'm not going to read that much into the rally because we've seen this before. We've seen a couple of nights where after these big sell-offs, we did have a bit of a bounce. We've seen intraday dead cat bounces. We've seen overnight dead cat bounces. Whether today is going to be a little different, I don't know yet. I mean, I don't know. Is sort of my mantra of the last couple of weeks, because the market activity and the action has been extraordinary, right? We've seen, sort of irrational euphoria and then complete decimation. The emotion on the upside and the downside feels like, okay, I got a fear of missing out. I got to get in. The bottom is done. The bottom is all locked in. And then, 2 o'clock, the sentiment all changes. And suddenly we're selling off into the close, and it's quite severe. So the market is baffling to me. It's sort of caught me. It catches me off guard on any given moment. The sell-offs over the last couple of days felt a little bit different than some others. It really felt like a big, large swath of pain and liquidation in a lot of ways. I don't call it a crash. I call it sort of a rotation in a lot of ways, but I do feel anxiety within the marketplace for sure.
What about, I know we're still in the thick of it here, but what is your sense on the quality of the earnings thus far?
You know what, Spencer, I have absolutely no faith in, I don't. I have no faith in earnings. And the reason I say that is because of sort of the way that the whole process has worked itself into the marketplace, where people lower their expectations, to facilitate some sort of a positive result when it does in fact come out. But you have to realize I'm a price action guy, right? I'm a firm believer in never trading stocks in anticipation of earnings. And I think that my premise has been borne out by the reaction, by the way stocks act when earnings come out. You can have a stock blow out on all fronts on guidance and earnings and go down $123. Look at Google. You can have a stock that misses and goes up. So it's irrational. I mean, I don't get it. It means that, look, that there are people out there with big plays on both sides. There are people out there with big opinions on both sides. People are hedging themselves up. Option plays involved. I mean, can you explain that to me?
I used to think that good earnings report meant stock goes higher, bad means stock goes lower, and I don't know if that used to be the case or if I was just wrong, but it
used to be the case.
Okay.
And now what's happening now in your eyes?
It's all about sentiment. It's all about sentiment. The market will find a reason people will find a reason to justify what the stock does. What the company says in its earnings report and what the stock does are very often two completely different things. And trying to square that circle can be really challenging. People ask us every single day, oh, so-and-so had earnings. Why is it up? Why is it down? A lot of times, I don't know.
You know what, buddy? I love that. And I don't know is the greatest answer ever. Let's look at yesterday or the last couple of days. The examples are they're just like mind blowing, right? Yeah. You saw, look, Facebook, they knocked the living shit out of it. Like whatever the earnings projections were, they knocked the shit out of it. They beat. Now think about all those people who were selling the crap out of it in anticipation of what they thought. They were selling it because they had an opinion. Earnings come out, they blow it up. People had an opinion all day long. CNBC and the other media outlets were talking about Microsoft and Google up 30%, projected earnings, Yeah. And they did post out good earnings. And the stock went down 123 points. It is absolutely meaningless. We've seen it, and you and I have talked about it over and over and over again. That day that the Fed finally announced about the taper and the interest rate raises for the first time, and that 2 o'clock, the market went up 1,000 points. There's nothing to say in any economic cookbook that says when you're talking about two majorly bearish signals coming into a marketplace that the market should do nothing but go down, and this market went up 1,000 points. So I've thrown out the terminology, bear, bull, kangaroo. I've thrown out the anticipation and trading earnings because they think it's going to go, that they're going to be good in guidance, because at the end of the day, it's meaningless. It's about perception, price action, and what the guys with the big fingers hitting those buttons, I call it gorillas in pajamas hitting buttons. People who don't have an edge but have an opinion, and who are selling and buying big stock in a market where sometimes the liquidity is just, it can be thin, it can be wild, it can be movement. Look at the action in the SPY yesterday. Look at the action in the SPY this morning, right? Look at the action yesterday, pre-market. Look at what the market did yesterday from 9:30 until 2 o'clock. We're talking about 500-point ranges. A range used to be a 50-cent range. A range is something that's bound by boundaries, right, within a sort of limited viewpoint. 500-point range, 5 different times in a day from 9:30 to 2 o'clock. That is mind-boggling.
I hear you. All right, Peter's fired up. We're fired up. Peter Tuchman, Wall Street Global Trading Academy. Link in the description.
Technical analysis, Spencer.
That's it.
It's the only defense against this friggin' madness, brother.
That's it. Peter, have a good one. Whoo, he's fired up today. All right, we got to hop. Before I go, though, I do want to mention that we are 2 weeks out from the FinTwit conference. It is around the corner, 2 weeks away. Use that link and discount code on the screen right there. I will be there. Nick Shaheen will be there. Who else? Jake Wojasnik from TrendSpotter will be there. Go on that website. Look at the agenda. It's stacked. 2 full days of trading education in Vegas, May 13th and 14th. Use the code BZYouTube20 to get 20% off your ticket. Do it. Seriously. If you haven't already, do it. All right, we got to hop because live trading has already started. Mitch, Ryan, and Junaid. So going to end the show. Send you guys over there. Smash that like button. I'll catch you guys later. Good luck at the open.